Today, the House sends the Genius Act stablecoin regulation to President Trump's desk. And Ryan Peters, assistant professor at Tulane's Freeman School of Business, breaks down the impact of this major development on financial stability and fintech innovation. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices mixed to end the week after the House passed 3 crypto-related bills yesterday afternoon. As of noon Eastern, Bitcoin fell less than 1%, trading just under $118,000. Ether climbed more than 4% to $3,500, and Solana's SOL token rose more than 1.5%. For the week, Bitcoin is pretty much flat as of around noon. Ether, however, advanced more than 19% this week and is on pace for its third straight weekly gain. Also, ETH is up nearly 44% over the past 2 weeks. That's its biggest 2-week gain since August 2021. Solana is up nearly 8% on the week. Focusing on ETFs that track the price of Ether, those products heading for a record-setting week. Yesterday, those funds saw daily inflows top those of Bitcoin ETFs for the first time ever, logging more than $600 million in net inflows, while Bitcoin funds saw inflows of $522 million. Okay, let's talk more about those legislative wins for the crypto industry. Crypto Week on Capitol Hill is wrapping up on a high note after the House passed 3 crypto-related bills yesterday afternoon. There's the Genius Act stablecoin regulation bill, which the Senate passed with bipartisan support last month and now moves to the president's desk. Then there's the market structure package known as the Clarity Act, which would set rules of the road for crypto. And finally, the anti-CBDC Surveillance State Act, which would prevent the Fed from creating a central bank digital currency. Both the Clarity Act and the Anti-CBDC Surveillance State Act now move to the Senate for consideration. These developments did not come without some drama, as the bill stalled multiple times this week with House Republicans disagreeing on whether to combine the legislation. Ultimately, Republican leaders put the 3 bills for a separate vote, focusing on the Genius Act, which passed on a 308 to 122 vote yesterday. That bill would set consumer protections for stablecoins, which are tied to an asset, often the US dollar. As of 1 p.m. at the time of filming, the president hasn't signed that bill yet, but he's expected to later this afternoon, as he has been vocal about his support for that piece of legislation, urging lawmakers to vote yes both during a White House meeting and in a post on Truth Social. The Blockchain Association's CEO joined Squawk Box this morning, where she explained how she anticipates the stablecoin space will evolve now that there's going to be regulatory guardrails in place.
I think you'll just continue to see this industry grow. The guardrails provide the customer protections that were needed to ensure that those who want to be invested in this space have the protections in place that they need. And really what we're seeing is a dollar dominance with stablecoins that will continue, and we're going to fulfill the president's wish of making the United States the crypto capital of the world.
Wall Street is also eagerly awaiting these new stablecoin rules. JP Chase CEO Jamie Dimon said the bank will get involved in stablecoins during an earnings call earlier in the week. He said that while he doesn't get the appeal of stablecoins, he can't afford to stay on the sidelines. Last month, JP Morgan announced the bank will launch a stablecoin-like deposit token that works only for its institutional clients. Citigroup and Bank of America executives have also said that they'd get involved in the stablecoin space. Rick Wurster, president and CEO Charles Schwab, joined Money Movers, where he explained the bank's crypto strategy now that crypto regulation has taken a major step forward.
Our clients hold more than 20% of the exchange-traded product crypto in the entire industry. So they're invested. It's still only about $25 billion out of the $10.8 trillion that our clients have. So it's still relatively small, but our clients own a big part of the market. We also anticipate launching Bitcoin and Ether sometime soon so that our clients have access to that. And we think that'll be an acceleration of our growth, because what we hear from many of our clients are that they have 98% of their wealth here at Schwab, and they might hold 1% or 2% at some digital native firm to hold their crypto. And they really want to bring it back to Schwab because they trust us. They want it to sit alongside their other assets. And so we think we'll see some real growth when we bring those to market.
All right, let's dig deeper into those 3 crypto bills that passed the House yesterday for our main story. I spoke with Ryan Peters, assistant professor at Tulane's Freeman School of Business in New Orleans, about what this major development means for financial stability and fintech innovation in the U.S. Ryan, thank you so much for joining us on Crypto World this week. Let's start with the big news this week, Washington making major moves toward crypto regulation. We've got stablecoin regulation through the Genius Act being sent to the president after clearing the House last night. We're filming this before the president is expected to sign it, but once he does, it'll be the first major standalone crypto rules signed into law. We've already seen some major financial institutions express interest in stablecoins as this bill reaches the finish line. But what should we expect from the industry going forward?
The first thing is that the banks are already building consortiums to prepare to address the market opportunity provided by this new stablecoin legislation. Obviously, the existing large stablecoins are Circle's USDC and Tether's USDT. But Bank of America, JP Morgan, Citibank, everybody's getting ready to issue their own stablecoins. In addition, no doubt, to smaller banks that will be joining this portion of the market as it evolves.
There's also the Clarity Act, which cleared the lower chamber. That bill aims to create a framework for regulators to handle other cryptocurrencies beyond stables, and that's now headed for the Senate, where it'll have to win 60 votes to pass. What do you make of that bill and the framework that it creates for the industry?
I think Clarity is a super necessary first step in establishing the roles that the different regulators are going to play. Obviously, there's been a long-standing sort of debate between the SEC and the CFTC about who regulates various digital assets. We have Bitcoin and Ethereum sort of firmly under CFTC jurisdiction today. There's a long tail of digital assets, thousands. I think the 7-point sort of clear line rules that the bill tries to establish are a great first step in establishing where the SEC should be, exerting its force and where the CFTC should be. What I especially like is the ability for the SEC, rather than focusing on regulating digital asset issuance, is actually being able to focus itself on its consumer protection role. I think this is a role that can uniquely be played by the SEC, and that it can take once its actual purview is established, that it can take a stronger stance on.
So there was some struggle to get these bills through the House, multi-day delays as Republicans fought over anti-CBDC rules and Democrats called out alleged corruption from the president regarding crypto. I want to split this point into two questions. So let's start with one, and then I'll pause. From your view, are there still gaps in the Genius Act that need to be addressed?
I think the Genius Act is a really good first step in establishing the rules of the road around stablecoin issuance and what issuers of custodial stablecoins are allowed to do. I don't think this is, by any stretch of the imagination, the end of the road. And both bills, both Genius and Clarity, have obviously a lot of regulations that they're directing the relevant regulatory bodies to write. And so the actual writing of the regulations is going to be massively important. I've advocated in particular that stablecoins, that custodial issued stablecoins should have an insurance fund and more disclosures around what their holdings are. I think those are really important and are going to make regulators more comfortable and investors more comfortable in engaging with these assets.
Should lawmakers follow up on this legislation with something else to support it, to address some of those things?
Oh, absolutely. I don't think this is the end of the road for digital asset or financial regulation legislation. I think there's necessarily a long path ahead, both on the legislative side and on the rulemaking side.
One of the biggest stories last year in 2024 was just how much money was pouring into House and Senate races to elect pro-crypto candidates. Crypto PACs are still amassing huge sums of money for the midterms and beyond. There has been criticism about just how much influence the industry has had on Washington. Do you expect that influence to keep growing? And what's next on the industry's agenda?
I mean, I think there are a lot of people that put a lot of money into lobbying and influencing the legislative process, the regulatory process, and the executive more broadly. Certainly, there's a lot of money coming from crypto-aligned PACs and things of that nature. The banking industry also obviously has a large influence in Washington. I don't see any of that stopping as long as we're writing legislation that sets the rules of the road. People are going to want to have influence on what those rules are.
Okay, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.